All right. Hey, everybody. I just want to welcome you back to another one of our Mortgage Minutes. We are here with one of my favorite lenders, Stacy Williams. Stacy, go ahead and take a hot minute and introduce yourself to those new people who maybe haven't seen you before, or tell us a little bit, what mortgage company you're with and all that kind of good stuff.
All right. Stacy Williams, Guild Mortgage here in Chandler, about 2 miles from your office at most. I've been in the industry for a little over 15 years now, so I've seen quite a bit over the time. And I don't know, other than that, I appreciate you giving us a chance to be on here with you.
Awesome. Stacy's been, for this whole past year, such a great, and beyond actually, such a great resource to all of our clients. And he is one of my preferred lenders. So we love having them come on and film a little video segment with us so that you can see their personality and the information that they have to share, and just feel like you get to know them a little bit before you dive into that whole, oh my gosh, loan process with them. So Stacy, thank you so much. And for those of you who don't know me, I'm Katie Evans. I'm the owner and lead agent over at the Living 48 real estate team. And you're here for one of our Mortgage Minute videos. We do a lot of other videos, but this one is specifically where we're chatting with one of our favorite lenders, and we're discussing something that has to do with the mortgage industry or your loan process and those kind of things. So Stacy was telling me today about some really, really exciting changes that literally just happened in the mortgage industry. So just to bring this into context for you, I know that this is going to be October when you're going to be watching this video, but we are actually filming it on September 29th. So literally it's just happening right now. It will still be very applicable when you get this and watch this video beginning of October. But Stacy, give us the exciting announcement.
Okay. Well, this specifically pertains to conventional financing. We have conventional, FHA, VA. There's some other platforms out there. But traditionally, conventional financing has had a minimum credit requirement of 620. And if you fell below 620, you would have to look at one of the alternative programs in order to qualify. Well, that minimum credit score has not changed. However, what has changed is the fact that they're now allowing us to average credit scores between multiple borrowers. And the best example I can give here is, let's say you have one borrower who is a 700 credit score, and their spouse, let's say, is a 600 credit score. Well, previously, we could not count that spouse's income. We couldn't have them on the loan with a 600 credit score. And now we would average those two scores to, which would make a 650 score. And then we can have both borrowers on the application, use both of their incomes, which will hopefully allow them to qualify for a price point that fits their needs.
Right. So just to kind of like put that in like normal words.
Yeah, sorry, wonder talk.
Yeah. I love it. You guys are so good at what you do. But basically what that means to us normal Joes that aren't as smart as you is that before you could only qualify for the loan off of one income, which meant that you were not going to be able to borrow as much money. Yeah. Now, if we can average the two, we can take both people's incomes, which means you've got more money coming into your household according to what the loan is looking at, which means you can now qualify for more money, hopefully. And that hopefully your average credit score is still high enough that it gets you in that good interest rate range. I mean, there's lots of moving parts and factors to the loan and all that, but I think the goal is that we have more income now that we can use to qualify you, which means more loan.
Yeah, more flexibility to help people be able to buy houses. That was part of the initiative.
Yeah.
Because I think a lot of people were missing the boat for conventional financing because they didn't meet the minimum credit requirement, and it was limiting people. So hopefully this will help more people qualify to utilize a conventional program versus, let's say, an FHA loan.
Right. And for those of you who have been watching the market or been trying to buy in the market right now, you know that it's either cash or conventional right now. We're really struggling to get our FHA buyers and our VA buyers in to properties because of some of the terms that it means to the sellers, and whether this is right or not, and I'm not saying it's right, but it is the reality. In the seller's mind, a conventional loan is stronger than an FHA loan.
Agreed. Absolutely. So, that is the perception.
Yeah, that is the perception. And so, we're really working to get all of our clients qualified conventionally. And if it works out that we get under contract and everything's going good and it is just it's a better move for our buyers to go FHA. We can change the loan program once we're under contract, but to be able to go in and get our bids won, a lot of the time we need to have the pre-qual and a conventional.
Right. And then also, our FHA, they have loan limits, 360-ish approximately, or loan amount around that range.
Right.
Where a conventional loan doesn't have that limitation. So especially if you're looking at a higher price point, now we can have dual incomes to use potentially, which can help us get there. So yeah.
That is awesome. So hey, everybody, breaking news, you heard it here.
Yes.
Fantastic. All right. Well, Stacy, we're not going to keep them long on this video. So really quickly, I just want to thank you again for popping on here and filming this with me. As people have more questions or they're considering purchasing, we always tell them to start over with our lenders and get pre-qualified and figure out the finances first before we set up on even a home search. So you're my first line of defense. How do people go about getting in touch with you if this is something that they're ready to start researching and start talking about? And folks, let me tell you, it's not too early. Even if you're thinking 6 months, a year down the road, I want you to start talking with the lenders now. Let's make sure that we've got your credit score where you need to be. If there's little changes that you can do, Stacy will know all of that. He will advise you on all of that. And so let's get you with the lender ASAP. So Stacy, if they're ready, if they want to chat with you, how can they get in touch with you? What's the best way?
Just give me a call directly at 480-454-5625.
Awesome. All right. And you guys, Guild Mortgage is awesome. And of course, if you didn't write that down fast enough, you're always welcome to head over to our website, www.living48realestate.com. All the way over to the side where it says more, go down, you'll see our preferred vendors. And under there, under the lender tab, you will absolutely find Stacy and all of his contact information. So please head over there and make sure that you visit him and get in contact with him as quickly as possible so that he can start answering those questions and make sure you are in the best possible situation. When we talk about, before we wrap this up, Stacy, when we talk about averaging those credit scores, I think a lot of people forget that there are just little small changes that you can do that within a month or so will pretty dramatically affect your credit score.
Oh yeah, yeah, we run across it all the time.
Yeah, so if we're averaging those and you've got one that's a little bit lower, you as the lender have the ability to look into their credit report where I don't have that ability and I'm not trained on advising them, and you are. And so folks, start talking with the lender like sooner rather than later. It really is the best thing. And don't correct me if I'm wrong, Stacy, but don't you guys have a program where you can help people repair credit and all that kind of stuff? Walk them through that process?
We can give them guidance. We can actually give them a step-by-step plan. And this is an automated system we use that will say, okay, if we have this particular credit score and we want to get to this higher credit score, what are the actions we can take and how much time will it take to achieve the results?
Yeah.
So we can give them pretty specific information.
I love it. And guys, that's all about being an informed consumer. It's all about being in control of your life and in control of your finances. And, and at some point we want to get you into a home, which is going to hedge against inflation, which obviously is a topic right now. Historically, it has always been an asset that has earned you money rather than cost you money. I know we had that big hiccup, but guess what? All those people that stuck through it, through the Great Recession and the market crash, they have more than gained back their property values. So historically, this has always been a home is always a great place to put your money. And especially now as we're walking into inflation and some of those other things that we're talking about in the news right now, I want you guys to get prepared. I want you to get into homes. I want this to be a great financial gift to yourself and to your family. So as we see rent prices continue to go up and up and up and up and up, we need to really be looking at this, kids. So Stacy, thank you so much for your time. I always appreciate having these conversations with you on here. And again, you're one of our favorites. So thank you so much for pouring into our clients and pouring into our business and our agents. And guys, give them a call. Okay. All right. Thanks everybody for watching this video, and we will catch you on our next Mortgage Minute. Talk to you later. Bye.